Good morning, Dr. Barton Jr. here with your pre-market update. Today, DR Tuesdays, as CJ will be back with you tomorrow, but looking forward to bringing you lots of interesting information. A huge week in the markets is no understatement. So many things happening in the markets, so many earnings reports, economic reports coming, things out of China, coronavirus information, so many things happening, so much to talk about, so many interesting things going on in the charts. We'll get right to it. So to do that, let me drop down here to the corner. We'll bring up our information that we're going to be talking about. There we go. And let's look at what we're going to be talking about today. And while we're doing that, I will pull up our chat to see everyone. Good morning, all the people in. For Anthony, Tommy, JMS, Sergio's here. All right, good morning, everyone. Glad to have you all on. Here's what we're going to be talking about. We're going to be looking at the state of the market as we always do. What's going on with the breakout into the same rectangle we were talking about last week? It's expanded just a teeny bit. We'll look at that. And those lines are still solid gold for us in understanding where the support and resistance lines are in the market, where the market's moving between in this market that continues to be a short-term volatile sideways, intermediate-term volatile, minor uptrend. Talk more about that when we get to the chart. We're also going to talk about COVID news. We're going to talk about the curve flattening, some good news coming out of the coronavirus issues here in the U.S., though still expanding a bit around the globe in some of the biggest hotspots. But we also have a huge slate of news. I've listed them all right there. We'll talk about them all briefly because to get into them in depth would take such a long time. We'll also talk about those big earnings coming out this week, and then a new breakout candidate to consider that's very interesting in a strong candidate in a field that's going to continue to do well into the end of the year, in a sector that's going to continue to do well into the end of the year. So with all that said, let me pop these notes off the screen, and I will jump over here to the other side so I will not be in the way should we get any charts that have something on the hard right edge. Let me zip over to this side. That should work. I'll also pull back up our chat so I can see other folks that are coming in. Good morning, folks that are coming in. Peter and Scott, Noah, all the new people coming in. We've got a lot to cover. And as always, at the end of our time together, we'll take a look at some of the stocks you're interested in. No need to type them in now. I'm not going to scroll way back and try to find things that people mentioned earlier in the live stream. We'll get those when I let you know. You can start popping those out, popping those stocks out, and we'll get to them then. So let's look at what's happening here with our market overview from the S&P 500. This is the cash index, the INX. And we can see here that we've transitioned from a long 3-week sideways rectangle just under intermediate lows to a week and a half, almost 2 weeks of going sideways in this rectangle just under those that old congestion area, that old reaction area or resistance, which has now been broken. And this, I believe, is the key point for right now. We've broken that old resistance zone that was so important from back here, from all these dates where we got market reactions here, and finally one here before we had our drop, that we are now seeing that same level as our current support. Resistance has turned into support, and our newest rectangle, which will blow up so we can take just a little closer look at that, our newest rectangle is now riding that blue line as a support level. And here's what we're seeing. We've gone up and made marginal new highs, maybe by 1% above the old highs made back in early June. Just a teeny bit higher there. Wednesday's close, and then Thursday of last week where we had that big afternoon reversal on a combination of coronavirus and news out of the new Cold War with China, which we'll talk more about briefly in just a moment. That big down Thursday was right there that took us right back down to support. But look, we held on Friday, even though it was a lower trading day. Yesterday we went down and tested it. Intraday opened a little bit above it, tested it, and now have gone higher. Today we're dropping back just a little bit, pre-market down just a touch across all indexes as we're talking here on Tuesday morning, and really no significant news, no significant China news, no significant coronavirus news overnight that is moving the market. It just seems to be a bit of an up day yesterday, a little bit not much follow through this morning, and that's about all we can say. That gold and silver are down a little bit. We'll talk about that saga here in just a minute as well. So we'll come back at the end to talk about where we see things going, where I see things going, and what's going to be driving us as we play around inside this new rectangle that you're seeing up there. It's going to be a very important set of lines. This line at the top and this line at the bottom, those are going to be the numbers we're going to be watching for the week ahead. Okay, so we've got all of that in the box. Let's talk now about some of the other issues that are hanging out in there. What's keeping us in this sideways bouncy market? Broken record time, but it is so important to keep our eyes on the narrative that is driving the market. So we have trying to keep this thing from climbing higher, and it's done a decent job. You can see over the past month and a half that we've kind of gone slowly up, and really staircased up, if you want to be honest. We've staircased up, but very slowly by small amounts that we've staircased up. And of course, it's the COVID-19 health and economic impacts, H&E, health and economic impacts, along with the new China Cold War. That's over here. The China Cold War is now over here, the new Cold War. Those are the things that are holding the market down. What is pushing the market up? It's the money. It's the so much money. It's the monetary stimulus and it's the fiscal stimulus. We just got new news on that last week with the Europeans chiming in with €750 billion in stimulus. And right now, Congress is debating what they're going to do for the next round of stimulus. I think it's very safe to say that there is going to be a new round of stimulus. It's just what it's going to look like. That is all the debate. That's more money down here. That's more pushing up this way, despite all of the fundamentals. And we got some big fundamental numbers coming out this week that are going to be impacting the market. So let's talk a little bit about that we'll jump on down now into our news you can use. And again, we'll come back to this chart and take a look real quickly at the end of our broadcast, or toward the end, to talk about some market directional thoughts. So let's look now at some things that are driving the markets. And one of the big ones that has been a huge issue, we're just going to look at these two graphs on the chart. Let me see if I can get them on here a little better, because it looks like our pop-up has come from the New York Times. The main reason I like this New York Times number, I'm not necessarily a big editorial fan of the New York Times at all, but they do use this 7-day moving average. Johns Hopkins uses a 4-day moving average, and it's much more ragged. I believe the 7-day average is the right one to use because of every dip that you see like this. Here's another one. All of these dips in the numbers, you can see these V's are just weekend data. So what happens every single weekend, and we talk about this so we don't take our eye off the important message, which is that moving average, not the daily numbers as the press would want us to believe. It's that moving average, because over the weekend, 2 or 3 days over the weekend, we get reporting for numbers that get pushed off, that don't get turned in, because it's the weekend. So that's going to happen, and it's been happening the whole time, and it's clear that that's what's happening. There's no reason to even debate it, but that's what's happening. So when we look at the numbers a little bit lower yesterday and the last 2 days here, which would be for Sunday and Saturday. Remember, the Monday numbers won't be reported till today, Tuesday, so they haven't come out yet. So to have this little downturn is normal, but what's the big deal is that we've had this flattening of the curve after really the high water mark for case numbers 2 weeks ago, and then last week we got just slightly below there. So it's flattening. The curve is flattening again after the huge escalation, the huge spike, the huge surge that we had here. But as we've talked about, what people are, I believe, keeping investors and traders not too worried about the economic impact going forward of COVID is that the mortality rate, you can see where we got from here to here level of cases, but the mortality rate, we got a clear divergence for the numbers of deaths per day. Now yesterday, New York Times is showing a little spike there, and they show it in yellow because there's some anomalies in the data, so I would discount that almost completely. We got up to about 1,000 deaths several days last week per day, but nothing near the 2,000 that we got multiple days back in April and May. So I think that speaks to the fact that we are handling at least the most severe cases better, and most likely getting fewer severe cases. Although hospitalization rates have gone up a bit during this uptrend, they went up significantly. We certainly didn't get to the level of overwhelm in our key hotspots that we did back in April and May. All those things pointing to the fact that the policymakers, that's the data, the raw data and scientific and medical input has to come together for policymakers to make policies. It's not just about the data. It is about what's right for all of your state if you're a governor, or what's right for all of the country if you're in Congress or the White House. So you have to bring all that data together, make policy, and I think the comparison of these two charts with this rise in cases and this drop in mortality rate is saying there's not going to be a need for the broad spread shutdowns that we saw before, and the markets are taking that into account. So there is our COVID overview, our coronavirus overview for the day, and I believe that is really what's a large part and what's driving us into that higher rectangle, is that there is less and less concern about the ongoing economic impact and in the form of shutdowns of businesses, etc., going forward. And that's a key thing that I believe that the markets are looking at very much. Now, let's talk about all of those things going on this week. We have a huge earnings week. We'll talk more about that, some individual earnings. But we also have today, Tuesday, starts the FOMC, the Fed, the Federal Open Market Committee meeting, where they will make an interest rate announcement tomorrow on Wednesday at 2 o'clock. So that will be big news. Don't expect any change in interest rates. I don't think many people are anticipating any change in interest rates. But what people will be looking is for the Fed statement. When the Fed statement comes out, it will definitely move the markets tomorrow. Are they going to continue to be dovish, meaning very supportive of putting more monetary stimulus into the market? They will probably also call on Congress to enact the package of fiscal stimulus, may even give some little, here's where we need that fiscal stimulus, how we need you to administer that. They might give some information on that, some guidance on that, and traders and investors will be watching that very closely. anything they say that about improving economy or significantly improving economy or anything that could be taken as monetarily more hawkish, in other words, it's bad, good news is bad. If they say the recovery is going better than expected or ahead of schedule, anything like that that would insinuate that the monetary stimulus spigot could be tightened down a little bit, that would be a big negative for the market. So we'll watch those two sides. The dovish versus hawkishness of the statement tomorrow will be the whole deal. It's going to be a deal for English majors, not for math majors. We're not going to be talking numbers. We're going to be talking qualitative guidance going forward from the Fed. That will be the important thing coming out tomorrow. Also, on Thursday, we have the GDP numbers coming out. So we have more numbers. The Q2 had called advanced GDP, not the final number, but the early GDP number for the second quarter of the year, which is where most of the coronavirus impact hit. We'll see if we're getting some numbers out of that, and analysts look at them and say, yep, V-shaped recovery, or more pain to come. It'll be a very interesting number when that one comes out. A lot of eyeballs will be watching that big GDP number on Thursday. So should you. So we also have on Wednesday, tomorrow, the big antitrust meeting going on in the meeting. It's not a meeting, it's a hearing at Congress, and a lot of the big the leaders of Amazon, Facebook, Microsoft, Google, all going to be called to testify on antitrust issues tomorrow. That will be a pretty big deal. We'll see how tough Congress is making noises about being with those big mega tech companies. So it'll be a very interesting one. Are they going to give some insinuations that they're looking to break things up, to do the antitrust deal, to do the Ma Bell deal? Are they going to break up AT&T again? Are they going to do what they did to Microsoft in the early 2000s when Microsoft was required by the government to debundle some of the things with their internet browser? You may remember internet browser, the operating system Windows, and then the Office suite, the Microsoft Office suite. They said we're too closely bundled. They had mandatory changes for Microsoft, and that took Microsoft into a multi-year flat period in terms of price growth for the stock. So it's going to be a big deal tomorrow. So big a deal that Facebook pushed their earnings back to Thursday. They were going to report Wednesday, but now we've got those big earnings reports coming out that we'll talk about in just a minute. We've got the big three of the big four. Actually, there's four of the big five coming up, and of the FANG Must stock, six. We got Netflix and Microsoft last week, but we have the other four coming up this week. And as a matter of fact, I'm going to make that change just so I don't forget it here on my chart, because I didn't have that on my original list. Okay, so here is what we're going to be looking at, is one more thing that's happening out there in our news, and it's really market news. But if we look at what's happening in two of the big precious metals, look at what's happened to gold. Now, gold is trading down this morning. It is trading down this morning by about a couple of percent. Let's pull it up, and we'll look at it on a 5-minute pre-market chart real quick. There's the 24-hour chart. You can see gold that topped out yesterday, closed out the evening. Actually, if we go back to 4 p.m., it's almost made up most of that this morning. So here was yesterday's close back at 4 p.m. right about there. So there was the close. And we're trading just showing just a few pennies above that now. Let's look at where silver's close is trading now versus yesterday's close. So you can see silver still not quite getting there. Let's see, let's get back to 4 p.m. is right this bar. So let's see, silver is weaker on the day. So if we pull up the horizontal line for silver from the close, right, this bar is the close over here. You can see silver still trading down a couple of percent this morning. It's one of the things we talked about in our Dark Edge project, that gold is looking asymptotic, but silver is looking not quite 2011 asymptotic, but exceptionally asymptotic. There's the number 2283 showing up on the chart from yesterday. Look at this move in silver. I mean, that is completely parabolic. And as we reach the wall, the asymptote, as we would call it, we're going to be watching for this thing to do something like this, for silver to go up one side of the Eiffel Tower, and then how far down will it come? Already down 2% today. Is this the start of the big move? I believe this might be the start of the initial reckoning, because the difference between what gold and silver were trading just a month ago is astonishing. And I believe all of that comes back to the last news topic we need to talk about, and that's the Cold War with China, the new Cold War with China. And I just wanted to check the time to make sure we give you folks some time to throw some names out there before we're done, because we also have to talk about those big earnings. But the bottom line there is there are 4 fronts for this Cold War. There is the traditional trade front. Let's just go ahead and tack them up here. We have the Cold War with China. I'll write that out here. There we go. The new Cold War. We'll call it, because that's what people, I think, to distinguish it from the Soviet Union era Cold War. So we have trade. We already know that. We've been working on that one for a while. And the second one that we already know about is in tech. So with tech espionage, surveillance, theft, outright theft, and other issues there. That's the ZTE original issues that we had, that the U.S. put restrictions there. Now with Huawei, those are just going to get more broad. They are not going to get lessened. Those are going to get more broad. The new ones now, though, that have not been on the radar screen at all have been geopolitical. So we'll just say geopolitical, the issues with South China Sea, the issue with the new securities rules in Hong Kong, and I believe the most important of all, the issues with Taiwan and China wanting to reunify Taiwan to the mainland China, put them under control or some influence of the Chinese Communist Party, the CCP, before the 100th anniversary of the Communist Chinese Party, which will be in 2021. That will be a huge geopolitical issue, and it's a huge geopolitical risk, because Taiwan is armed to the teeth thanks to the U.S. and other Western allies, and the U.S. is going to support Taiwan in this. So that is a true tinderbox area. When we look at South China Sea, Hong Kong, and Taiwan, the uncertainty coming from those issues will continue to be forefront in the market. And the last one, and the scary one, in addition, it's hard to see us getting to a shooting war with China. Now, we could have some confrontations and some other things. That one's hard to see. This one's more likely, and I think could be more disruptive for markets, and that is, let's call it capital. The battle around capital. Now, that takes a lot of forms. What could happen? The U.S. could talk about restricting stocks, restricting in U.S. investment in stocks. So withhold U.S. capital from Chinese companies. That could be in the bond world. We could withhold interest rate payments that are owed on all of the $1.1 trillion worth of treasury bonds that China holds. China could also put a chunk of those bonds, just dump them on the market and kill the price of U.S. treasury bonds. So there's lots of battles that could be fought in this area, and that amount of uncertainty, especially around these two. We already kind of knew these two. These were fairly known knowns. The unknowns and what could happen going forward here, I believe, is the reason that we see precious metals prices escalating like they are. In addition to, yes, a lot of fiat currency being printed around the globe by all central banks to fight the pandemic, to make the economic monetary fight for the pandemic. But with all of this uncertainty, we already knew about all that long before we got these jumps. I think these jumps have more to do with China than they have to do with the printing of the fiat currency. So things to keep in the front of our minds, that these issues are not just about politics. They're not just about geopolitics. They really are about impacts to the markets as well. So we as traders and investors need to keep them on our radar screen. All right, I gave that a little bit of time because it's so very important for us going forward here. So I am going to take a breath, then we're going to look at earnings. I'm actually going to take a breath and I'm going to go over and look at some of the comments in the box just to make sure I'm up to speed there. So here we go. There we go. Yeah, there's some questions there. That is some of the stuff we get. One, Ruby talked about defense stocks that I like. One of my favorites that I still have for a long time because of what they're doing. They were just sanctioned by, we talked about this a couple of weeks ago. I talked about how much I liked Lockheed. It was one of my picks that I gave you right here on the Monday morning live stream. I also gave it to those of you who tuned in at TD Ameritrade's television network with Nicole. I gave her this pick. We talked about it a week before last, and I like Lockheed Martin. It's been beaten down. That's going to be one of my one of the stocks that I like for the long term, that I believe you can buy in every pullback here. And knowing that they have all the defense issues that they have, all the defense contracts heating up geopolitical problems, I think defense stocks are going to become more in the spotlight. But Lockheed Martin also has this fantastic cybersecurity group that brings them some consulting income outside of the defense world, although that's used inside the defense world as well. But a lot of companies recognize them perhaps as the world leader in cybersecurity for large systems. So that's a really cool thing there. All right, so with that said, we've got a bunch of earnings. We got 4 mega stocks. We have 4 mega stocks coming out with earnings this week. Let's look at the first one. Amazon will be coming out so on Thursday. Well, let's actually go Facebook, which moved from Wednesday to Thursday. Facebook, you would think all of the issues that they've had recently about the boycott, the July boycott, all of that stuff. I wrote a whole article why the July boycott wasn't that big a deal to the stock in general. I think it kind of gets some zeitgeist issue around, yeah, people are still concerned about privacy, about what Facebook is doing. And it's interesting about the policing that these folks are being asked to do. We'll hear a lot about that tomorrow when they go to Congress, that, you know, things that are considered hate speech and et cetera, defending against that, things that are manipulating the upcoming election in November. All of those things are going to be talked about a lot, especially among Facebook and Google, who have an impact with search engines and with social media in reverse order there. So I think we're going to hear a lot about that. And with all of this going on, Facebook from its after the big drop, you know, okay, we're going to boycott them. Yep, rebound immediately. And then a little bit down, it came down with the rest. This drop is just the big NASDAQ drop, which we played actually for a nice profit already, buying the Qs yesterday on Friday inside of the Dark Edge project. That was the big drop. We're getting a rebound here. Where do we go from here? Tough to say. Facebook, with the market down a little bit, is up just a touch today. I think we'll see that going into Thursday with all of these stocks. So we've got Facebook. We have also, we did just put up Amazon, and I think Amazon on all of these significant pullbacks is buyable. Full disclosure, I own both Facebook and Amazon and Apple. Don't have any Microsoft. Still kicking myself about that one. But but I've owned them for a long time, for years. So these things, these stocks are going to just continue to rule the world. They continue to show double-digit gains in the largest revenue streams, among the largest revenue streams of the world, and clearly the highest market caps in the world, and they're still growing at double digits. Who wouldn't afford? GM would kill for double-digit growth. ExxonMobil, some of the other old school largest companies would love to have that kind of growth. And here are the biggest companies still putting it on, still the place to be, still the ones to buy in pullbacks. I would be surprised if Amazon doesn't have a pretty good earnings report to give us, although I will say that this could be a short term, even if they have good numbers. If they have good but not blowout amazing numbers, they might get some sell the news issues just like Microsoft did. When Azure said they were no longer growing at 50%, Microsoft got beaten down last week despite really strong earnings and revenue numbers. So it's a fickle thing when your price gets run up this strongly, even though it's had a bit of a pullback. It won't be surprised to see a sell the news issue with Amazon, which just gives you a chance to pick up some shares at a lower price. I believe that's my firm conviction on Amazon. Been talking about those throughout the pandemic as a stock you needed to be in. All right, who else we got coming up? We have Apple. Apple also reporting on Thursday after the close with the other three, and Google, which is the next one. They had a milder pullback than some, and a bigger pullback than others. You can see they had a pretty good drop from up about the I think they got up to 38. What was their high here? It was around 380, 399. It just got just below 400. So they had a pretty good pullback of almost 10% here during the Nasdaq correction, the rotation out of tech stocks over the past few days. They've already bounced back the most. It will be interesting for them to talk about what they look at the forward. They probably may or may not give guidance, but what they see as sales into the end of the year. And people are going to be keeping their eye on not just the iPhone as forever, but they're going to be looking at that services and the other sector where their iPod are going to be as a growing revenue stream for them. Amazingly, their services number, people are going to look for continued growth there. That's what we're going to be watching for in Apple. And lastly, Google. Google also, all those charts look kind of sort of similar. Up here, I believe that once again, Google is going to be one that's going to be a good bellwether for ad revenue online to see what they're going to say, how that recovered in Q2 or not, and what they see going forward. I see Google as sort of a middle of the road. I don't have a strong opinions about how good or not good Google's earnings are going to be, because I have a tough time parsing what they're going to say about how they're ramping up, recovering on ad revenue. I think it's going to be a very interesting one, but boy, a tough one to predict. So there is my moment of clarity and transparency, that I don't have a strong opinion on Google going into their earnings. All right. Dave, we played this one last time. So there is a Google play. The after earnings play on Google is really strong. If Google has the price on their stock opens up the next day, Google usually about 80% of the time continues to go in the direction during the day of the price move. So if it opens up, it continues to go up in an intraday for the day after earnings. And if it goes down, if it opens down from the previous day's close, it continues to go down. It's a great earnings play that I really like on Google. So it's one to keep your eye on. So there is a bunch of news, a bunch of stuff out there. Let me give you one breakout candidate, as I said we would do in our notes. I'll give you one breakout candidate. I'm going to give you one more look at the INX charts. Then we'll spend a few minutes looking at your stocks. So don't type them in yet. But I'm going to take them once I say go. I'll start taking them then. All right, so what are we going to look at here? We are going to look at our breakout pick first, and that is Laboratory Corp. You can see that Laboratory Corp has been strong, as you might expect, with a lot of testing being needed to be done out there, and they have broken through their all-time highs here from back here, and now are riding that little seat. Let's see how far back. Yeah, so that's at least multi-year high. I guess we could take a quick look and see if that is an all-time high. Let's look at the monthly. We'll call that an all-time high unless they were higher maybe 30 years ago, 20 years ago. That's the monthly chart dating. Let's see. Our dates are buried down there. Going back, so let's say it's a 20-year high. I'm going to call it an all-time high. I'm pretty sure they've never been higher. And that breakout, I think, is very playable here, because we're not going to need less testing to be done. in the future. I think we're going to need more, and you can see it's forming its own little rectangle here right above those all-time highs. It's forming its own little rectangle. Had a strong day yesterday. I think any pullback in laboratory holdings is going to be viable. It's up this morning. I can't tell if the volume on which it is up today, but that's one that I like going forward. Okay, let's talk now about, oh, we got to look at the INX. Where are we going? Where are we going on INX? I think buying in the bottom part of this box, you're going to be rewarded on a down open like we're likely to see this morning. I believe we will break out of this box. Between sometime now and the election, we are going to hit the all-time highs. We're going to go up and test them. Whether we break them or not will depend a lot on the news items we've been talking about around coronavirus in China. But with all of this money out there, I believe there is a high probability. It is the highest probability of the directions for the market that we will go up and test those all-time highs between now and the election. All right, with that said, let's look at some of your data out there. Let's look at what's going on now. So I said that, and Jay already had one in. So we'll look at PSX for you, because the Qs I just talked about bullish. You like looking at Philips. This was a company that Buffett got into famously a couple of years ago. Not sure he's still as heavily invested in Philips, but we look at this, and let's look and compare it to say, let's say Exxon, which has been struggling. Doesn't look much different than Exxon. Let's see. Conoco is, let's see how they, whoops. Let's see here. Some of the other, boy, somebody, how come, quickly, Conoco leaps out of my mind. Used to be owned by that should get us. Yeah, P. How come I can't think of P? All right, COP, ConocoPhillips. About the same, a little bit stronger. That's one of the stocks that I like here in the space. Better maybe than Philips, but not much to say about the chart that we're seeing there. So let's look at a couple of others. Let's look at a couple of the others that are up here. Sebastian came quickly. He waited patiently for Micron. I like the story of, I think they've been beaten down a bit. I like Micron better than Western Digital, although they, you can see Micron above the 200, Western Digital below among the memory specialists. I do like Micron. You can see one of the things that we've got going on here with Micron is let's get a pen, is a bit of a volatility contraction into this triangle after the move up. I believe that can break out to the upside. So I do like Micron here. DGX, we'll take a quick look at. Are they like LabCorp? DGX is, we did play this one for 100% winner earlier in Dark Edge Project, and DGX is, yeah, I think similar. We're not going to need fewer laboratory tests. So I think these are all possibilities on for upward movement on all of these types of healthcare companies, all the testing folks. So looking out for VIX call options for a pop. You know, you play in VIX. Let's look at the VXX, the tradable ETF. When you get down to lows like we're seeing here on VXX, that's the time you gotta buy low. You gotta buy low on VIX, and but the problem is that VIX can stay low for a long time. Spikes don't last very long. Spikes don't last long in VIX, and that's what those look like. But down movement, down movement, down movement, down movement, down movement can last a long time. That's just the nature of bull markets, is low volatility. So we see that over and over again. So yeah, I like VIX here. Would you go September, October? You know, you're going to pay a lot more for the October, so it's a risk-reward balance. Are we going to get something to pop between now and September? it's possible. This is going to be all about headline risk or a change in things. So if you're looking for some hedging, you can use it here. If you're looking just for a money-making trade with all the money flowing into the market, you're going to have to hope to catch one of these spikes, because that's about all you're going to catch. I don't think we're going to see between now and the election, I think there's very little chance that we're going to see a really protracted down market again, unless, again, something pops in China. I don't see a coronavirus activity that's going to drive us down there now with the way the mortality curves are working. So I don't believe we're going to get just a grinding up VIX. I believe you might get a spike on some headlines, but don't see it going. I don't see that being a market you're going to play for an extended big pullback. Could we get a snap down? Yeah, sure, for a week or two, but I don't see an extended play there. So with that said, it looks like I would think the probabilities are going to favor October, but the reward to risk is going to be tough. You might just play the Septembers and then roll them into the Octobers, but I think that's picking a VIX trade is tough for me, because I don't see the market heading in that direction. All right, let's look at some of these others. INX. I don't know what INX is, Naveed. You'll have to give me that one. So we've got all right, JK. You want 4 different ones. Let's look at your pot stock here, and at Kronos, are we going to get a breakout? Well, I think there's a very low risk trade to be had. You could buy this and scale in anytime it gets down close to 6. You could buy 650s, scale in at 6.25, scale in at 610, and then if it breaks below 6, or really below these, we got 2 little tails here at 582, a close. There's been no closes below 6 since back in May. So if we're forming here at a pretty significant support level, here we had support, here it became resistance until it broke out, remained resistance, couldn't break out, remained resistance. So that's a pretty good level. The 6th level showing up pretty strong here on the chart, and all the times that it's been tested. Scale in here if you would like to add some pot stock exposure. Scale in and move on that one. So and you could but then you got to get out point. Once it gets below, breaks 582 on a closing basis, or even 6 on a closing basis, 582 intraday, 6 on a closing basis, got to be out. All right, that is all we're going to have time for. We got 3 minutes until the open. Glad to have everyone on. It's awesome to have you. Yeah, we got some great names out here. I'm sorry we couldn't get to all of those. A bunch of people wanted to look at some different things there. So glad to have everybody on. We've run out of time. We got to get to the market open. All you Dark Edge Project folks, we'll see you at 10:35 as usual in the Dark Edge trading room. New trade today. Lots going on in the market. Several different things we want to look at there. So thanks so much for being on with us with our pre-market update here this morning on Tuesday, the 28th of July, says the number on my computer screen. Glad to have you on. Look forward to seeing you again next Tuesday. CJ will be on Wednesday, Thursday, Friday as normal, and we will look forward to catching you next week, same time, same place. Have a great rest of your week. Stay safe out there, and God bless you.